Hello to everyone. Today I am here with Introduction to Business Finance, Financial Statements, Part 5. If you are interested to have update academic related videos related to finance and banking, please do subscribe my channel. Here we are going to discuss, did the expansion create additional net operating profit after tax? Logical answer is yes, provided the addition of fixed assets are revenue generating assets. In case of a non-revenue generating asset, they will add expense to the business. Now, here we can review that net operating profit after tax for the year 2023. Here we can see profitability increase, and with the increase in the profitability, uh, the net operating profit after tax also increased as compared to 22. Thereafter, what effect did the expansion have on net operating working capital? If your production capacity is enhanced, definitely they require more operating working capital. Working capital can meet by external sources and can also meet by internal sources. If a company is generating incremental cash flow against expansion, the working capital can meet through those incremental cash flows. Again, provided if the assets or the expansion work is related to revenue generation. Just have a look. Current assets minus non-interest bearing current assets. Current assets we can see from our balance sheet. Non-interest bearing assets include like accounts payable, accruals, and interest bearing include notes payable, short-term borrowing, etc. So here we can compare. There is an increase in net operating working capital because of the expansion. As the answer is positive, it means the company can meet its net operating working capital through internal sources. Company didn't need any external funding. If the answer is negative, so in that case, we will have to meet the deficit from any external source. What effect did the expansion have on capital used in operation? Operating capital, that is equal to net operating working capital plus net operating fixed assets. Here we can see the value is increased as compared to the previous year. In the previous year, the value was 3,149,582, and in the present year, we have the value 3,636,543. So the expansion had on expansion use in operation, definitely with the expansion, the operating capital will also increase. That can evident from this slide. Thereafter, what is your initial assessment of the expansion effect on operation? On one side, we have the increase in the sale. On the other side, net operating profit after tax also increased. Net operating working capital also increased. Operating capital also increased. Net income also increased. So here If we go in depth, we will find that uh, that the assets which we have added to the organization are revenue generating. Firstly, sales are increased due to the increase of the sales, net operating profit is increased, and on the other side, net operating working capital also increased, but it's positive. It means it can be managed from internally operating capital also increase and net income also increase. All the trends show positive effect on the organizational operations. Thereafter, what effect did the company expansion has on its net cash flows and operating cash flows? Net cash flows that are equal to net income plus depreciation. We have added back depreciation because depreciation is the non-cash expense. So there is a increasing trend from the previous year. And in a similar way, operating cash flow is also reflecting the increasing trend as compared to the previous year. Thank you very much. See you again with the upcoming video on the same topic very soon.